have resources shares really pushing the market today, and resources shares like BHP Billiton and Anglo American gaining very strongly on the back of those firmer commodity prices.
Yes, even we're seeing a whole entire move in the resource sector. We saw Sasol up higher. We're seeing a lot of risk appetite coming back into the market off Japan's quantitative easing and the interest rate cut yesterday. And we're seeing world leaders gathering today to discuss further quantitative easing, as well as the Fed coming out to say that they'll be looking at quantitative easing. So that all really just spurring equities this morning.
What sorts of volumes are we seeing on the markets? Is this buying with conviction in the market?
We've seen on average between 2 and 3 billion traded on average for the last week or so, and today we're seeing over 4 billion. We are at key technical levels in terms of the top and the all share, so investors definitely, the trend is moving up higher, and really investors trying to really try and catch the uptrend. So we're seeing a lot of volume on the day.
What are some of the risks that you see at the moment? Because of course we do have some reports coming out of the United States this afternoon. I think the ADP employment report, also the Challenger job cuts. Could we see a pullback in the markets if these reports come in weaker than expected?
Stephen, I think if those numbers come out weaker than expected, I think that possibly would actually bolster the market, because those numbers are negative. It will definitely push the Fed to announce quantitative easing sooner rather than later. The risk to the numbers is, in terms of the rally, is if we do get world leaders coming back out of their meeting today to say they're not going to be doing any quantitative easing at all, and that really will pull the risk appetite back.
So economic data at this point, we're going to respond positively either way, because if the numbers are good, then that's good, and if the numbers are bad, we get more quantitative easing. Is that how the market's reading it at this stage?
Exactly, Stephen. Either way, the market is poised for higher gains this afternoon. We could possibly see, if those numbers come out in line, we could see the market not really move much. We are looking at starting the third quarter corporate earnings tomorrow, with Alcoa coming out, and we've seen a lot of news coming out of the with analyst downgrades coming through in terms of the third quarter earnings, as well as JP Morgan coming out to say that they're expecting the third quarter earnings to kind of beat expectations. So quite mixed there. So if those ADP numbers come through in line, it could be fairly quiet until we get earnings out tomorrow.
Of course, this is the third quarter earnings, and right at the beginning of the year we saw some strong earnings coming out of companies, but we have seen the economic growth losing a bit of momentum as the year has progressed. So, as you say, some downgrades there. How about the forward-looking statements? Is the market really going to be focused on how these companies see profits growing into the future?
Yes, Stephen. We've seen manufacture really slowing down the last couple of months. Obviously, the employment numbers are quite important. We've seen retail numbers out of the US fairly steady-ish, and really investors are going to be looking at the headline earnings. A lot of corporates are cash flush. There've been a lot of M&A activity. What are companies going to be doing in the future, going into the fourth quarter, into the new year? Are they seeing tougher conditions? Are they seeing consumers really coming back? And that's really what's going to be important.
Because you mentioned some key technical levels, and we had the S&P breaking that 1150 level yesterday. And do you think that we can maintain above these technical levels? Do you think that we are going to meet some resistance on them?
Stephen, if we continue, if we do get, and I think Alcoa will be a very good benchmark, as well as the ADP numbers out this afternoon, if we do see positive employment numbers out of the ADP, and we see a steady unemployment rate on Friday, as well as stronger corporate earnings, we could see the S&P rally up to 1170 and probably up to 1200. So it is sustainable if we do see those earnings come through, and obviously positive feedback from the quantitative easing that could see markets moving higher.
Of course, in the meantime, we've had the rand also crossing some key technical levels, now really holding firm in the mid 680s. Where to next for the rand, in your view, Yolanda?
And short term, the short term support level at 682. If we do break that, we could strengthen all the way to 670. With the increased appetite in movement into equities, we could see us getting to those levels in the next couple of weeks, Stephen.
How about bonds? Because last week we saw bonds losing a bit of ground. We saw some foreign selling of bonds. Though yesterday's bond auction was apparently quite well subscribed. So are we seeing some action coming back into the bond market?
Quite interestingly, in terms of the bond market, we saw foreign sellers being net sellers, of bonds in the last week. In fact, yesterday we saw them selling 600 million, and locals buying 2 billion rands worth of bonds, which is quite positive. It was obviously, we're seeing bond prices higher today, very supportive, and obviously, when one looks at those numbers, we're seeing a lot of profit taking. So foreign investors a little bit cautious, waiting for those corporate earning numbers out. Stephen.
Gold in the meantime reaching new highs as well, very close to that $1,350 an ounce mark. Do you think we're likely to break that?
Stephen, depending on what comes out of the quantitative easing meeting, if they have good strategies coming out, we could see gold going up to $1,400 quite easily. We're at that 1,350, which is a fairly good support level. So we could see it go higher if we have further quantitative easing.